Cogeco Communications said last week that it is ramping up its wireless service in Canadian markets. Now, the plan is to compete, of course, with other big carriers, and apparently the target market here is the low to mid data user. Let's get more from the president and CEO of Cogeco and Cogeco Communications, Fred Perron. Fred, great to talk to you again. Thanks very much for coming on the show.
Hi, Andy. It's good to be back on your show.
You're in this transformation. Just remind us, where is most of your revenue coming from these days? What activities?
So we offer high-speed internet, home television, home phone in both Canada and the United States. We've been selling wireless phones in the United States as well for about a year, and now we're launching wireless in Canada as well.
So you have a wireless service south of the border?
We do.
That's interesting. So is that just to consumers who already take your cable and internet?
That's right. That's actually our strategy in both countries, Andy, which is to offer wireless service to our existing wireline customers who more and more are asking for this additional service from us.
You're not planning to go out into the big pool, though, of people who aren't your customers and try to address the bigger market at this stage?
No, we're not. The first priority is really as a loyalty tool for our existing customers. So we'll have a good deal for our customers who've been with us already. We sell it to them as a bundle, and that's our primary strategy for the moment.
That's interesting. So why do you say a loyalty tool? People just like to deal with one provider, for example?
That's correct. They like having the bill from the same provider. And we see over time that customers who buy more than one product from us tend to stay longer with us.
Are you in every province? Can you remind us what your geographical spread in Canada is?
In the United States, we're in about 13 states, and in Canada, we operate in both Quebec and Ontario in mostly rural markets and semi-rural markets. So we don't operate in the Montreals and Torontos of this world. Our target market is rural and semi-rural customers.
Why is that? What's the attraction there, or why is that the strategy you've chosen?
Well, it's happened quite organically over time, Andy, which is where we've been expanding, where we had the opportunity to buy companies over time when there was a wave of consolidation a few years ago. But as it stands now, we find that our brand and our customer service resonates very well in those communities. In addition, if you're an Ontario customer, for example, and you call us, your call will be answered by one of our colleagues who lives in Ontario and works in Ontario. And we find that that resonates very well with local customers. That's
interesting. People like to feel they're talking to somebody, well, not a neighbor, but somebody who's in the same part of the world.
That's correct.
Yeah, that is fascinating. Now, talk to us about the U.S. You've had some setbacks there, and you're running into competitive pressure. Tell us about that.
Sure. We reported our Q3 results earlier this week. We had a lot of positive things to report. So the launch of a wireless service in Canada, strong customer growth in Canada. We're also in a 3-year transformation where we're ahead of plan in terms of reducing costs. The one challenge that we reported on is indeed, as you mentioned, the U.S. market. The U.S. market in telecom is really challenging at the moment. That being said, we were very clear that we think Q3 was a low point, and we see gradual improvement of our performance in the U.S. market. We got some pretty bold plans to accelerate our performance there.
It must be hard to compete there. I mean, you are a minnow in a vast market. For example, dealing with suppliers, you wouldn't have the same purchasing power.
That can be a challenge. That being said, Cogeco's existed 68 years, and we've gotten the question about our size for 68 years, and we're still doing quite well today. So there is a real opportunity for us to carve our niche, and that's what we're focused on.
Would you ever think, the US will sell out and just stick to Canada? You've got quite a lot on your plate here with the wireless rollout, for example.
We explored some opportunities in our US market. We did a full review of our operations there over the past year, and we concluded that for the time being, we will be holding on to our assets there.
One thing I'm always curious about, and you're probably sick of getting this question, you have this situation where there's two companies. Cogeco controls Cogeco Communications, but oddly has a much smaller market cap. Would you ever clean it up by, in some way, taking one of those companies off the market?
Yeah, we have two different listed companies for historical reasons, but the large one is really Cogeco Communications, which has about $3 billion market cap. We have a holding, as you point out, which is Cogeco Inc. Cogeco Inc. also happens to have our radio business. We have some of the most listened to radio stations in all of Canada, which sit in that holding company. For us, it's not that big of a complexity to manage the two entities. We do it in a relatively streamlined fashion.
Right. You don't get pushback from investors who say, hey, I'd like to buy into you, but I don't know which one?
Most investors who are interested purely in telecoms have a direct access to that through Cogeco Communications, and we find it relatively effective to run that structure.
Now, I was looking at an RBC report, and they are forecasting that your revenue will drop slightly through 2027. Can you tell me why that would be, Fred?
Revenue has been declining, particularly in the United States, and that's due not only to the competitive pressures that we've talked about earlier, but also we see a faster rate of TV cord cutting in the United States than we do in Canada. In other words, American consumers are shifting to over-the-top internet platforms for TV faster than Canadians. That being said, a lot of that revenue from TV disconnections is actually not impacting our profits so much because it comes at very low margin for us, because most of that money is fed back to the content distributor. So I wouldn't read too much into the top line declines in some of those cases.
It's interesting. We're going to talk to a Citi analyst later on the close who reckons that what he calls open platforms, such as YouTube, where the public just submit content, are challenging traditional media. I'm curious, do you have any handle? I know this may be too detailed for you. You're the guy at the top. But when you look at your internet traffic, is Netflix a huge part of it, and is YouTube a huge part of it?
Yeah, without revealing confidential secrets, it is a fact that those OTT platforms are becoming a large part of our internet traffic. Canada's a little different on that. Canadian consumers still watch a fair amount of traditional television, not only hockey, for example, and other sports, but also local news.
Yeah, it is interesting. I mean, as an expert in this industry, do you think Netflix will get a run for its money from YouTube? I know they're very different services. A lot of stuff on YouTube is complete rubbish, but there is some quality content there.
There's been a proliferation of OTT apps over the past couple of years. The average viewer in the United States watches, I think it's more than 5 platforms on average. Those platforms have been raising their prices over time. So that adds up to a consumer. So some predict that there will be a consolidation of those platforms over time. How the cookie crumbles is yet to be seen.